That is happening. So what is going on in the current situation with India, right? What is going on? Well, it's very, very simple and yet very complicated because there are major themes that needs to be understood, right? So the first thing is obviously there is concern that Trump is tariffing 50% tariffs on India. Okay. 50% tariffs. That's huge. That's a lot. Should we be concerned over this? Okay. This is the tariff. How much tariff does India impose on U.S. import? Overall, most favored nation applied rates. Overall average is 17%. So let's talk about what's going on right now. Let us talk about what's happening with the situation with India, and this is extremely important for you to understand, because it's going to impact. First of all, keep in mind, 50% tariff on India goods coming in. Basically, what we're doing, what the U.S. is doing, it is essentially cutting off most Indian exports to the U.S. That's a big deal. And when we talk about exports, I mean all of the things that India is exporting. This is going to have a huge impact on India. Okay, so let me, for example, what are we talking about? Well, we're talking about everything having to do with manufacturing. Now, of course, one thing we need to understand is that most of where does India makes its money, right? Where does India? Well, first of all, 50% of its GDP, 50% of the money where Modi makes his money is in the service sector. Okay, so it's not just about making a bunch of T-shirts, right? It's a little more complicated than that. After all, India is where mathematics were created, invented. So it's a grand country. It's a very proud people, right? So 50 to 50% of GDP is in the service sector. So we're not dealing with that. Okay, so what are we talking about? Agricultural and activities, about 20% of GDP. And that is a sticking point, because what's happening is Modi is trying to protect this. He said, you can't touch this. You can't touch this. Well, the U.S. administration says, well, we'd like to have access to this market. We would like to sell our wheat. Can we sell our wheat to the U.S., to India? No, you can't touch this. That's closed. And I'll show you how they close it. What we are really talking about is the industrial sector, which is about it's not small, it's about a quarter of what India produces, 25%. We're talking manufacturing, automobiles, steel, textile, chemical, pharmaceutical, construction, mining, utilities. So you just can't ignore it. And this is where the 50% is being focused on. So, of course, you're saying, well, and this is where you have to be very careful about the rhetoric that you hear out there. Wow, the U.S., really, 50%. Why? I thought India was your friend, and now you're taxing them 50%. That is too much. You shouldn't be doing this. Right? You shouldn't be doing this. That is not good. Well, hold on. Let's see what's going on the other side of the cone. What kind of tariffs, right? What kind of tariffs does India put on the rest of the world, right? For example, how much tariff does India impose on the U.S. imports? Because the U.S. administration is saying they've been taking advantage of the U.S. This is not fair. What's really going on? Well, I will tell you that overall, most favored nation applied rate to the U.S. import. This is the stuff that's made in the U.S. being sent to the U.S. to China, to India. And I want my subscribers to understand what's happening in the world that you're living in. Tariffs. So these are the tariffs that India is charging on U.S. imports. Overall average in 2023, 2024, 17%. So India was charging 17% on average to goods made in the U.S. imported. And So basically, we're talking about 13.5% for non-agricultural goods. But for anything agricultural, the wheat, the meat, 39% tariffs. Okay, Larry? 39% tariffs. That is stiff. That basically says we don't need, we've got, and I'll explain to you that basically the farmers, the Indian farmers, are a big source for Modi. And he tells the farmers, don't worry, we will never compromise so your job is safe. But you have to be careful, because if he loses the farmers, then he's got a revolution on his hands. So he's basically saying to the farmers, don't worry, this is going to stick. We are going to keep that 39%. So basically, we don't want any agricultural product from the U.S. Okay, but you know that the U.S. also wants to, there's a rust belt that needs to be taken care of, and all the meat and all the wheat. So no, we don't want any of that. Okay, so that 39%. Now, the Indian average tariff on global import is 5.4%. For the U.S., it's 17%. You can understand the U.S. administration attitude towards India, saying, you're abusing it, you're charging too much. Now, why is that? Why is this a big deal today and it wasn't a big deal yesterday, right? Why is that? And that is the intent of the strategy. That's what you need to understand the strategy. And don't forget to subscribe to this channel, because I come to you every day and I want to explain to you what is going on and see how that's going to impact you. Now, obviously, the fact that, if you're charging 50% of tariffs on, manufacturers of jeans and T-shirts and shoes, these guys are out, right? They're in major trouble. I mean, it's only 25%. Well, not only, but it's 25% of the Indian industry, the manufacturing. But still, they need to deal with this. But why are we in this situation now? Now, you hear both sides. One side is going to tell you, well, this is Trump, the strategy, the U.S. strategy is too strong. This was our friend. Okay, first of all, let me explain to you. One thing that you need to understand, and you should apply to your life as well. These countries do not have friends. Right? They have interests. What's in my interest? Oh, that's not nice. You're thinking about yourself. Well, listen, I mean, you have to take care of 350 million people, and Moody's got to take care of, I don't know, like 2 billion people, 1+ billion. Okay, so they have interest. As long as the interests are aligned, this is great. But when it starts being aligned, then we got trouble. That's what's happening right now. Why are we here? We are here for a reason that you need to understand, and that's what's driving this whole show. Is basically the U.S. wants to remain relevant in the world. Right? The U.S. is slowly, but surely losing ground in all the major aspects of productions, except for services, which is about 80% of the U.S. GDP. But still, that 20 to 25% industrial base that it's losing, that is a problem, because what you're losing is pharmaceutical, weapons, rare minerals, right? You're losing semiconductors. As long as you know that other countries are going to deliver to you, then it's fine. But suppose that they don't. Suppose that tomorrow the door is closed and they do business with each other and they don't want you anymore. It happens. It has happened. Remember, at one point, Italy was the masters of the world. Spain, England, that's the U.S. Be careful. That can happen. So what do we do? Well, I mean, basically what the strategy right now from the U.S. government is to say we need to hit it, and we need to hit it now, and we need to hit it hard. And of course, depending who you're listening to, they're going to tell you, wow, this is wrong what you're doing. You shouldn't be pushing these good countries around like that. Why are you doing that? Well, that's because it's the president, you know how he is. Blah. No, you can't think in those terms. You have to think in terms of interests. as far as the U.S. government is concerned, it is in the government's interest to remain relevant, and therefore we need to play hard right now. How about equal tariffs? Yes, that's the idea, right? That would be great if everybody charge everyone. But don't forget, India is charging, right? Is charging 39% tariff on agricultural goods. That is not even tariffs. This is 39. When you say 39%, you're saying it's close to you. Okay. And it is charging more Indians to the U.S., which is about the Indians' average tariff on global imports is 5.4%, and on U.S. good is 6.1% on average. So it's a little higher. Now, it'd be nice if everybody could get along, right? No tariffs, everybody trades. See, Alfonso, Trump has become too greedy, and this is where the rhetoric comes from. They're basically bringing it down in the newspaper, in the news, to something that most people could understand. It is all about one person, right? But why is that one person doing it? Because he's unreasonable. What do you know all the facts, right? Don't forget, the U.S. government, they've got lots and lots and lots of advisors telling them, but listen, this is like chess, and you need to understand that. Because if you're doing business with India or you're competing with India, this has a lot to do with it. Because if you understand what's happening, Jean-Pierre, if you understand what's happening, then you will get it. Because obviously, can you afford to lose India? No. Why? Well, because at the end of the day, the U.S. is fighting on two fronts. First, it needs to remain relevant from an industrial point of view. But it also needs to make sure that India and China and Russia do not get too close, comfortable, that they don't need anyone else and they just trade with each other and the U.S. is out, right? Carlos, yes, who started the tariffs? But it's not so much who, we know, but we have to understand why. Why did we start with those tariffs? Now, of course, everybody's opinion. You say, well, because this is from one person who decided that it being unreasonable against other people. That's possible, because the question is, yes, the U.S. needs to do something, but is this the right way of doing it? Because right now, if you look at what's happening with Modi, he's saying, I'm very disappointed. 50% is a lot. Basically, I am losing, it doesn't include pharmaceutical and phones for now, but it includes everything else, right? We're talking about, manufacturing of shirts, T-shirts, shoes, all these gold and whatever things that they send to the U.S. And you say, well, that's okay, but I'm not going to stop buying oil from Russia, because that's going to be a big hole for us. We rely 30% of our oil is coming from Russia. And now you also want me to go against the Indian farmers and sell you, open this market to you. No, we could sustain ourselves, because, and then don't forget, there's this concept in India, which is, it's not called India Make India Great Again. It's called the Swadeshi push, which is basically, let's try to be as self-reliant as possible. The point is what's going to happen, because Modi is basically saying no. So is that the right strategy? Because the more you push what they're thinking, okay, fine, so what do? I cannot say no to the oil, although he didn't actually say that. He did say very clearly, Modi basically saying, has commented on whether he might reduce, has not commented if he was going to reduce or not stop oil imports. But he has insisted that India would never compromise on the interests of farmers, fishermen, and dairy farmers. Basically, I'm going to keep the 39% tariffs. That's what he's doing. Now, of course, the question is, Well, but then what's the solution? And what's going to be the further impact? Because that's what I'm here to tell you, and to explain to you, to advise you, to tell you, this is what's going to happen. Well, hello, YouTubers. What's going to happen is Modi is definitely not going to say no to his abandon his farmers. Maybe doing something with the oil at some point, but that's going to also have a huge impact. What's going to happen is you need to realize that he has no choice. He has no choice. What is he going to do? Is he going to go with the US? Right? So what's going to happen is, and it's already happening, they are looking for other ways to, to sell their products to someone else. But unfortunately, with the US being 25% of GDP, and from the US being its most important trading partner, in fact, the US has a trade deficit with India. It's not going to be easy to replace the US, at least not now. And that's the scary part for the administration, because they're probably thinking, listen, if we don't do this now, they're not going to care later on when we become irrelevant. When in fact, the India is trying to say, okay, can we make the stuff that we make and sell it to someone else? Okay, you have to understand, in 2024, the U.S. trade deficit with India reached 45.8 billion, which is a 6% increase from 2023. So there's a lot more stuff coming from India than going the other way, and it's increasing, right? While good trade shows a significant deficit, the U.S. enjoyed a small surplus. Now, of course, we're talking, industry. In terms of service, well, the U.S. has a small surplus in services trade to India. So it's got about, services export to India, 41.8, service import from India, 41.6. So basically, the U.S. strength is its service. 80% of the U.S. industry really going out is services, right? And that's talking about banks and finance and anything that you don't make, you just create out of thin air, literally. So that's a good thing. But how long is that going to last? So let me ask you a question. Let me get a feel for the room. First question. Does India, let me ask Ernest, let me ask a question. Starting poll right now. Does the U.S., does India need the U.S.? Because if they don't need the U.S., then the U.S. is in trouble. Because then, you know what? I'm gonna do business with China. I'm gonna do business with Russia, and I'm out of here. You should know where it's pushing further to the right, is that India right now, for example, the U.S. wanted to have a Quad summit with India. Now this is pushing to the extreme. They wanted to have a Quad summit. What do you mean a Quad summit between U.S., India, Australia, and Japan? That is off. But Modi is going to attend the SCO summit in China. What does that mean? Well, I mean that Modi is going to China, and a summit is, right? It's not about what they say, it's about what they don't say. It's about networking, right? And hold on, I have something interesting. German Aliero Campos. The United States has been under the wrong impression that India is an ally. However, they are opportunistic. Have you ever heard the phrase, "Hi, my friend, I have never trusted them"? Well, we shall see, right? But the point is, they are charging 39% tariffs on agricultural product to protect real, they're fair. But one thing, if you're gonna think about these things, you have to realize that you have to stop thinking, hey, Akshashking Singh, it's not about being friends or being enemies, unless there's a war. It's about the interests, and they're all looking out for their own interests. Now, of course, when it's time to sell it to the people, to the masses, then they put it in a format as he's my friend and he's not my friend, he's my enemy. These people have no friends. These people have no enemies. They just have interests. If Modi wants to be friend with the U.S. administration and says, fine, I'm going to take away my 39% tariffs on my farmers so that you could be my friend, do you know what the farmers are going to do? Have you seen the living condition? This is going to be a problem. Why not talk about U.S. subsidies on agro and farmers, right? So basically what you're doing all day, which I think is an impossible job, frankly, I would not want to have this job, because you have to manage all of these interests, and you are going to upset someone along the way. Someone's going to be pissed. The U.S., I like what Charles is saying, the U.S. political relationship has the ability to create global stability for generations and flourish. Yes, if everyone gets along, then you have a chance. Then it can happen. But why not? Well, can't get along because, for example, Modi, like I said, is going to go to visit China August 31st to September 1st, marking his first trip since 2019. And Putin is going to be visiting India. And the more Trump pushes and the administration pushes on and for the right reason, according to them, the more you might get them to get closer together. But maybe it might be too soon, because you just can't replace the U.S. And maybe, just maybe, that the strategy of the U.S. is to say, you know what? If we're going to do this thing, we better do it right now. Because the longer we wait, the harder it's going to get. Right? You can't wait 3 years to do a tariff agreement. You know, I think it took 2.5 years to do, took 2 to 3 years to do the NAFTA between the U.S. and Canada and Mexico, right? Where they basically said, you know what, we're all friends, we're all on top of each other, let's just, fine. Took 3 years. You don't have 3 years. I mean, in 5 to 7 years, the U.S. will lose its lead with semiconductors. The U.S. right now imports 90%, almost all of its antibiotics from China. Doesn't make it anymore. Now, of course, there's nothing wrong with it purposely, right? Well, let them make them. The point is, suppose tomorrow that channel gets cut off and you don't have access to it. How much are you willing to pay for antibiotics, right? Because you're going to have to pay. And that's the idea. Yes, I agree with what I think Charles said. It would be great, but price 1 kilo of tomatoes in India versus the U.S. is much cheaper, says Sam. Yes, it is much cheaper. The only thing is, you cannot sell your tomatoes. You can't sell, well, not that way, but the wheat and corn, you can't sell that to China, to India, because it's 39% tariffs, 39. So that's basically closed. That is a market that is closed, right? So the trade deficit, so that we learn something, the trade deficit has been growing between the U.S. and India. Now, when we say about trade deficit, it means that the U.S. is importing more than it's exporting. Is it, what's bad? What's wrong about that? No, there's nothing wrong with it. It's just that you're dependent now. But that's okay. He's my friend. Then yes, it's fine. Well, can I sell them something? No, because it's 39% tariff. So basically, you are sending them dollars because that's what they want, because the dollar is still a reserve currency, and they are sending you their ware. And as they're doing it, they are learning how to do it better and better. Now, that does not include pharmaceutical, by the way, which the U.S. does get a lot from India. But the point is, you're getting a lot of stuff from India. And this good trade deficit is valued at $46 billion. Now, the question next is, well, what happens if this, because right now it looks to me like this 50% is sticking. The U.S. administration is obviously upset. Well, I shouldn't say upset, because that's a human term. The U.S. administration view that it's not in its interest, right, to have India buying oil from Russia at a discount, because what's doing it is preventing the war in Ukraine to end, which is another fallacy, right? There's another fallacy. Trump, and in fact, now I'm seeing it in the news, what I've been saying for the past 2 days, that Trump is not going to meet Putin in Russia to talk about Ukraine. That is not what it's about. Not really. Because in fact, today Trump is meeting with the European, but that's just for show. He's meeting with Russia because he wants to talk about their future. What are you doing? Are you going to get close to China? Are you going to get close to me? What can I do to help you? What are you going to do? Trump is basically trying, or the administration, because there's more than one person, is basically trying to get Russia away from China. What does Russia want? Russia wants to make sure, and it's working, wants to keep the U.S. away from Europe. You see the interest? They all have different interests. Now, in the middle of all this is you, my subscribers, because you need to understand that whatever these people are going to do, decide, think, and act on will have an impact in the U.S. economy. If the U.S. administration doesn't do anything and keeps on going the way it's been doing, well, there's going to be less and less and less and less industrial jobs. Right now, they're looking desperately for engineers to work on semiconductors because the U.S. has lost that, or is in the process of losing that battle. Very slowly. The U.S. share of semiconductors in 2025 is just 12%. It used to be 37%. So that is a big jump. So let's go back to see, well, what's 50% going to do to India? Well, it would be what we would call the real growth headwind, with the biggest hits to export-heavy sector like textile, gems, jewelry, apparel, some engineering goods. Pharmaceutical and phones are off right now. So that's that. You're not going to see a $300 phone, okay? But you are going to see this. What it likely does to India over the next 12 months, well, that's going to take off 0.5 percentage points of its GDP growth. So Modi better think about that if he wants to be reelected. Now, he's in a tough spot, because if he does one way, he loses half a percentage point on GDP. If he goes the other way, he loses a farmer and his population. What do you want to do? Of course, he's very upset, as you could see, that the administration is putting him in this situation. And obviously, when you look at the news and you look at what people are telling you most of the time, unfortunately, because it's biased, they say, well, it's the administration. You know how they are. They're coercing everyone, and they're pushing and tugging, and they're upsetting everyone. Well, that is a problem. That's a problem, right? The risk, obviously, is that we are going to be faced with what you called India, basically, what it's likely to does to India, it will shave 0.5% point on its GDP. It will hit key export sector. The U.S. has 18% of merchandise export, textile, jewelry. You know, it will pressure profit and loss on export belts. You know, like the textile and all these people are. Some firms are thinking that maybe, hey, maybe I should be relocating. Right? Relocate to other countries, or relocate maybe even to the U.S. to bypass the duties. This is serious for these people. If you're making if you're not making any kind of market and current effect, that's going to be a problem. The current account, weaker export to the Europe export would widen the current account unless offset by softer oil or diversion on other market. So the government is already planning exporter support. It needs help. And if they do not have that in the medium term, 12 to 36 months, trade diversion. You know, maybe he's thinking to pivoting to 50 alternative markets, West Asia, Africa, right? Government is already planning exporter support. So basically, the next 12 months, 12 to 13 months, then India needs to do something. It needs to go to alternative markets to blunt the blow. By replacing U.S. demand at scale is difficult and slow. But that is exactly what the U.S. is concerned about, right? The U.S. is concerned that, you know what, you guys are going to shift already. China hatred is infantile. They are nobody's enemy. I agree with Kevin, right? China is the best potential friend of India and Russia. Of course, they're next to each other. And China is not out to conquer the world, right? China basically is about to decouple. Right? They're slowly decoupling. I mean, they need the U.S. for certain things still. They need mostly the U.S. for the consumers. Now, you have to understand that the U.S. consumer is the biggest strength that the U.S. administration has to bargain with. The U.S. consumer is a driving force globally, and it needs it, and it's doing it, and it's got a lot of power because no one consumes more than the U.S. consumer, and it consumes everything, and that is extremely important. It's extremely important because that's where the strength of it comes from. And that is going to be the next step. So what happens next? Well, I mean, India is going to try to find other markets. But still, the U.S. is India's number one export market, 18%, right? It raised landed price on a big slice of India's outward faces economy, compressing margins and volume. That's going to hurt. Now, right now, they're probably doing what we're doing right now. They're sitting down and say, okay, what do we do? Maybe we should take it a notch down on the oil. Well, if you do that, you're going to bring inflation because now we're going to have to buy real oil and it's going to cost us more money. Okay, well, what do we do? Maybe we should invest in the U.S. because that's a strategy that's been working. For example, in Taiwan, for example, what the president, although the U.S. Government doesn't want to see them right now, but Taiwan has said that they wanted to invest $100 billion in the U.S. Versus $5 billion last year, and they say no, not 100. We need 400 billion. We want you to invest 400 billion. They went to Japan, and Japan says I give you 550, and they went to Europe and they gave you 600, and then they gave you 750. So the U.S. then invest in the U.S. Now, of course, we could have a discussion as to what exactly those investments are. Right? Are they real investments? Well, they are investment, but it's not like they're coming over and telling the U.S. administration, hey, like Japan didn't say, here's $600 billion, $550 billion, do what you want to do, invest in the U.S. Or we're going to buy a building for 500 and start making factory. No, it's not like exactly like that. These are more like loans. Okay, so let's take a look. I'm very curious to see what... does India need the U.S.? 62% says no. Wow. Interesting. Well, if it doesn't need the US and you're Modi, you say, you know what? I'm moving on. And that is exactly what the US is concerned about. Now, of course, this is a big, big, big topic because if all of these countries start to think the same way, of course, the way it's being perceived is well, it's not really the U.S. fault, it's the U.S. government's fault because they're very mean and nasty. And therefore, they're basically pushing all these countries away from the U.S. Or maybe they were going anyway. This is just precipitating it. For example, when Biden weaponized the dollar, remember when the U.S., when the Ukraine invaded the dollar, remember that? Remember that? Remember when he invaded? That's what happened. And could this happen again? I don't know. So we have to be very careful as to what is going on. Wow. That's what's happening. So basically, what we have is we had the Biden weaponizing the dollar. He was weaponizing the dollar. And what did that do? Well, it basically pushed Russia closer to China. You can't win, right? I know you can't win. But that's the idea. Carlos, hi. Is this what the U.S. administration is doing right now? It's pushing India towards China. Did it have a choice? I mean, what is the U.S. doing what it's doing? What's the point? Well, it's doing it because it's trying to remain relevant. It's trying to keep these people together. Because if India turns around and starts selling into China and to Russia, it doesn't need the U.S. I mean, this is BRIC idea. Remember the BRICS? That's a big problem. That's a big situation that needs to be dealt with at some point. And that is the concern. That is the situation. So, the 50% on tariff on India is going to have a huge impact. Textile and garment, severely vulnerable. I mean, you know, you've seen the shirt, the T-shirt, the shoes are becoming economy unviable. It is unviable. They can't survive. The government sector is scrambling. Some factories offering to shift production to Bangladesh, Vietnam, and Guatemala to retain U.S. buyers. But the U.S. is going to say, whoa, no, that's not going to work because you're trying to circumvent us. No. That's not going to happen. What are you going to do? Gems and jewelry facing stiff competition. Swedish, Italian, and other producers may undercut Indian export due to high tariffs. Some manufacturers are already considering relocating operations on or diversify the markets. That's what's happening right now. They're trying to diversify away. Auto component, U.S. is a major destination. Indian export is $7 billion. A 50% tariff could reduce the export by 15 to 20%, eating about 8% of India's auto component production. Now, obviously, all of these, if you have business in the U.S., right, and you're looking at this, and you're making T-shirt, and you're making, right, obviously, that's going to help the U.S. Because then you say, well, maybe now I can start competing. Leather, diamond polishing, carpets, home textile. That is highly exposed. If I were to advise anyone in the U.S., I would say, well, see how this goes. Maybe now it's time to get back into this business. Of course, people made fun of, well, you're going to make T-shirt in the U.S.? Why not? Well, the U.S. is all about, biotech and AI and all these things. Well, but that makes you dependent from other countries. And you don't know what it is that they're doing. Right? Let me do another survey, because now this is going to be a good one. Is the U.S. being unreasonable? Let's do a poll right now. Is the U.S. being unreasonable? The previous polls was that does India need the U.S.? 62% said no. Is U.S. being unreasonable? Let's find out. And 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 the idea of this being reasonable, unreasonable, is being really used by the media, right? To make it in terms of, look, that's so unfair. Look what they're doing. He was so nice, and the U.S. is so mean. But the U.S., of course, depends who you're listening to, because don't forget, I want to remind you, the other side of the coin, right? That India is charging 39% tariffs on agricultural goods and is charging 13.5% on non-agricultural goods. So if you want to sell your stuff to Ukraine, is goofy when you are negotiating from a point of weakness. But you know what? I don't think that, who said that? John. You don't, Mr. DC, you don't need us, and we definitely don't need you. What you should say is that it is not in my interest to need you, and it's not in your interest to need me, right? Well, the U.S. needs India because a lot of the pharmaceutical item, such as antibiotics, are made in India and China. So the U.S. needs. Now, of course, at some point, maybe we'll have a bunch of fortresses. Fortress America, Fortress China, Fortress Russia, right? Everybody stays on their own and work by themselves. Is that the way to go about it? Maybe you don't like your neighbors, so But a country like the U.S. would probably get away with, although not right now, because now you have to bring back those jobs, bring back those industry in the U.S., and everything would be more. It's a lot. At the end of the day, as far as Ukraine is concerned, when you say Ukraine is goofy, when you are negotiating from a point of weakness, John Q. Public makes an interesting point, because right now there is no negotiation, right? The Ukraine is not going to go to Alaska. In fact, there was some even rumors, which is ridiculous, that the U.S. is going to give up Alaska to Russia to make it happen, right? This is because at one point, Alaska belonged to Russia. Right? That's not going to happen. But the point is, this is where it goes with that. The point, what you need to understand, is that at the end of the day, the U.S. doesn't particularly care about what's going on in the Ukraine, meaning that it is in their interest to talk about the war. It is their interest to make sure that you stop the killing, correct? But what's of their interest as well is to make sure that Russia stay closer to the U.S. than China. Shunganshu, I'm sorry if I butchered your name there, but basically I'm from India, and Trump's image is damaged here so much. Of course. And how is it damaged? Well, because they tell you, look, he's charging us 50%. That's not fair. That's so cruel, an unusual punishment. Well, yes, that's true. But, you're charging US 39% from an agricultural project, and you're charging 13.5% on the other. So it's not like the India was not charging. It's just that what's happening with the US administration, Roman says they talk to India and then they like us. You see, again, it's back to this, I like you and I don't like you. True. But what's really happening is there's a shift. And this is you have to be very careful, because what the US administration is doing, for valid or invalid reason, depending on your side, is that it's shaking things up. People were like, imagine you're making pants for Levi's, right? Jeans and things. It's 50% more now. Now, you're still making them, and you're going to go to the wholesaler. You're going to say, okay, here's my pair of pants for $10 that you're going to sell for $30. And the guy's going to get it, or the woman, she's going to get it, and he's going to say, I can't take that because now I got to sell this for, instead of selling for $50, I got to sell it for, $75. Unless I take a hit. And I can't take a 40% hit on my margins. Because remember, India doesn't pay the tariffs, right? It's the importer. So we're clear on that. I've said that a few things. The thing is, this is good that we have an Indian perspective. The thing is, Indian farmer is a sensitive issue in India. If their party gives us access, loses election. Yeah, that's the thing. He's right. Modi is basically, Modi tells the Indian farmer he will never compromise. Because if he loses a farmer, he doesn't have a job. So it is his interest to please the farmer. So that's not going to happen. So U.S. administration, I'm sorry, I could do anything else. Well, then do something else. Then what you need to do, you have to stop buying oil. I can't do that either. Well, then what's the point of any of this? Okay, we are losing ground, and that's the issue that is happening. The U.S. is losing ground, is trying to maintain ground, and it's not happening. Don't forget, India imposes 17% on U.S. on average, with 39% agricultural goods, which is a lot. On average, 5.4% to the rest of the world and 6.1% to the U.S. on average. So why not? But that's a lot. And the U.S. has a huge trade deficit. And this 50% tariff is going to hit a core industry. So in terms of advice, right? So if in the U.S. and you're making textile, you're making gem, jewelry, auto components, leather, diamond, pharmaceutical, at some point, you might be losing a big competitor. Yeah, so that could be good. Maybe we start making T-shirts back in the U.S. Although some people will tell you, but that's not what we want to do. Well, I know, but what's the alternative? Because that's what we're going to. We are going to a world where all the wars are going up. Now, let's not forget, in the meantime, while all this is going on, let me remind you that in her corner, very quietly, China, for example, is building the largest shipbuilders in the world, right? It is creating the world's biggest shipbuilder while the U.S. searches for a path back into its business. So the U.S., as I think, is like 2% of shipbuilding capacity in the world, while China is at 49%. Okay, China is also building the largest, the biggest giant hydro power project in the world. Why? Because it wants to remain independent from other countries from its energy, because it gets energy from Russia and the US, some of it. It wants to remain independent. US trade deficit causes doesn't count Amazon, Google, Microsoft income. No, well, yeah, the U.S. has a trade surplus, right, through the services. He's right on that. But when it comes down to trades, it's pretty bad. Huge trade. Guys like this don't have a clue. So actually, U.S. don't have deficit, correct? No. Okay, so they are, Sudanshu, there's two train of thought. So, two actual. The U.S. has a fiscal deficit. That means that it owes more than it pays. And it has a huge trade deficit. Trade deficit, not service deficit, right? It has a huge trade deficit because everyone says, well, why are we focusing on trade all the time? It's only 20% of the GDP. You're making it a big deal out of nothing because most of the money the U.S., as Sudanshu mentioned, he says, well, I mean, what about Amazon and Google? No, there's no trade deficit on services. But there's trade deficit on trade, like pharmaceutical items and semiconductors and rare earth minerals. So what's wrong with that? Well, what's wrong with it is it's very difficult for a country to operate if it's got what we call twin deficit, a trade deficit and a fiscal deficit at the same time, because all you're doing is you're borrowing money to buy more stuff. No, as long as people want your dollar, you're fine, right? Everybody wants the dollar. Sure, it's a reserve currency. What happens when the world says, I don't want dollars anymore? And you know what? I don't need you as a customer either, quite frankly, because that's what it means, right? Then what is the US going to do? Well, that would never happen. I mean, this is ridiculous. Well, I mean, if you look at the trends, I'm sorry, look at the trends. It's is India getting oil cheaper from Russia? Yes, John. And that is the impact of weaponizing the dollar that Biden, the previous administration, did when they told Russia, you know what? Because you invaded Ukraine and we don't agree with it, we're going to take you out of the dollar system. So if you want to sell your oil, because at that time you needed petrodollars to buy oil, so that's done away with, believe it or not, then you're done. So then Russia said, okay, well, called India, called Modi, say, how about I give you a discount on the oil? He says, sure, I'll take it. If you save billions and billions of dollars. And that's what happened. And so Modi is buying that oil, and the U.S. administration says, no, don't buy the oil, because now you're helping him. Not so much you're helping him through the war with Ukraine, that too, but really, you guys are getting too close together. You're buying oil from each other. You're talking to each other. I don't want that. That's how you have to think of it in terms of this. You have to think in terms of them trying to get together while the U.S. is staying weakening slowly. And that's the issue. That's going to be the problem. Now, of course, how does this resolve itself? Because obviously, it would appear that U.S. administration's stance came too quick, and is forcing everyone to move quicker to whatever they were going to do anyway, right? China is building the dam, this huge power plant in the middle of the mountain somewhere, which India is not too happy about, because they're going to be blasting. This thing is going to be enormous, $156 billion. And they're building ships, so they're becoming independent more and more. India is moving away and trying to find other sources. So it's like everyone is accelerating what they were going to do anyway. Anybody talk about England anymore? Right? Why you bring up England? Well, believe it or not, at some point, England was like the US. You couldn't do anything without involving England, because they said that the sun never sets. I'm sure Sue Danishu from India knows about that, but the sun never sets on the English empire. Where are they now? Hey, Nagash, where are they now? Anybody talking about England? No, irrelevant. Well, I wouldn't say irrelevant, but actually one of the few friends, actually you got 10%, you got a good deal with the tariffs, right? So it happens. It could happen very quickly if you don't pay attention. And what happened to England? Why did England lose all of its power? Why is England not relevant? Sun never set, because you will never trust English in the dark. That's a good one. That's probably an Indian. That's got to be an Indian proverb. Sun never sets English empire, because even gods never trust English in the dark. This is an English. This is good. Yeah, and so we're not talking about. Listen, if I'm telling you this right now, the White House, they probably won't doing. Okay, what are we doing? Well, people are very upset about what we're doing. I know people are upset, but I'm here to protect the interests. Yeah, are you doing it the right way though? Are you pushing a little too hard? Because the last time somebody pushed that hard, it was Biden, and look what happened to Russia. They got really close to. The Indian MP said that, and I boosted it. Turn the electricity to the planet and see what happens. Yeah. So, and that's what they were doing. They basically kind of pushed all these countries together. And the concern is that this is what the current administration is doing again. Because everyone kept thinking about the US as this big, big, good, you know, bear that everybody liked and was friendly and it was powerful, but didn't bother anyone. Of course, everybody was kind of taking advantage of it in the meantime. How did they take advantage? Well, they basically used the fact that the dollar was needed, right, to sell stuff to the U.S., and they did. And when you make something, how do you get good at something? You keep making them. This is Socrates said that. You know, the best way of doing something, the best way to do things, you keep doing the same thing over and over and over, and you get better at it. That's what they were doing. That's what you do. You become good at something, the more of the same thing you keep doing. That's what you do. But then what are you giving them? Well, they want your dollars because they use the dollars and to buy other places and construct and pay other people and get things going for their interest. And the U.S. got its interest because it got all these things that it needed, right? And of course, it needs more. And if one day that supply chain stops, what do you do? Where do you get your stuff from, right? You have to pay more. And that's what they're concerned about. They're concerned that they're going to lose that. They're going to lose that situation. What else do we have? So basically, is US being unreasonable? 50-50. It is 50-50, my friends. So it is not. It is not 100. I have almost 60, 58 vote. 53% says is U.S. being unreasonable? No, although it's not 100%. It's half and half. So the jury is still out. So if this is, I wouldn't call it a statistical. It's not a statistical sampling, but gives you a feel as to what the mood is out there. The mood is pretty uneven. I mean, in that case, it's even. Well, on 53-47. Let's keep it going a little bit more to make sure we have a better understanding of what's happening, right? So that is a concern. These people are very concerned that somehow all this is going to go away and we are going to end up in a big situation. Why? Well, I'll tell you why. Because what happens ultimately is the fact that where does this end? How does this end? Because if everybody is looking for their own interest, right? It's going to hurt India. It's going to hurt the U.S. Less, obviously, but India more now, but the U.S. later on. Because if India is able to find an alternative source, then all you did is that you accelerated the situation, you pushed it forward, and guess what? You're in big trouble. So that's a concern that everyone has. That is a concern that the administration has, and then India has, because they're saying, well, we were doing so great before. Why are we having this discussion? So remember, right now, Modi is going to attend the SCO summit in China. I believe that's what's driving all these people. Their interests are not aligned anymore. You mean just now? No. I mean, their interests have been coming apart slowly over time. Slowly, their interests have been coming apart. The issue is this, and that's what you need to worry about for long term, because this channel is about, and don't forget to subscribe, by the way. And don't forget their super chats. So have some coffee or whatever you want me to buy, and I'll buy. And if you give me a super chats, I'll hear you out more thoroughly, so you could share your views. The concern is this. Let's suppose the U.S. does what it does, and India says no, and then the U.S. is fine. 50% it is. India goes through some sort of trouble. They go down. They have some problem with the GDP, but because he was faithful to the farmers, he keeps his job, and he keeps going, and then he's able to divert away from the U.S. Russia has already diverted from the U.S. already, by the way. I just want to let you know there's not much. They don't need the U.S. for anything. So they're independent. And then China does it really on its way, really fast. In fact, I'm sure I've told you about the fact that from a biotech perspective, take a look at that short, they're discovering more molecules than U.S. biotech. So they're doing quite fine. Okay. Then what happens? Well, what happens is the U.S. is isolated finally after 5-7 years from now. And what do you do? What does that mean, isolated? It means that now that I need pharmaceutical item, I'm going to have to pay more for it. And now I need, if I need rare earth minerals, not really rare, by the way, it's just that we haven't learned how to do it, then you don't know where to get it. So then what happens? Well, essentially, you're going to have to go and get it. But they don't want to sell it to you. You don't understand. You have to go and get it. What do I mean by some of the stuff that they need to go and get it? Well, you just go through the list of items that basically say that the U.S. is taking. The U.S. is basically has an aging infrastructure in terms of manufacturing, so semiconductors, batteries, steel, machine tool, EV components. Semiconductors, years to critical loss, 5 to 7 years, because Taiwan and South Korea and China. EV component, 3 to 5 years because of China. Generic drugs, 3 to 5 years, India, China, right? The U.S. is going to have to go and get it itself. You don't want to sell it to me, or you're ridiculously expensive. I'm coming in to get it. You know what that's called? That's called war. That's a concern, right? So everybody closes in, as long as you don't need anyone else. And I guess the Chinese approach is to say, you know what? We don't need anyone. We have enough food for everyone. We're going to have enough energy for everyone. Maybe I don't need everyone. Maybe we need Russia and maybe a little bit of India to sell our stuff. But then we're done. That's it. It's over. Why? Because we want to improve the quality of the people living in the country. It's my interest to please my people, right? Because you don't want all these people toiling away in factories making cheap goods for the U.S. anymore. These people want a life too. They want to live. There's nothing wrong with that. So far, what the U.S. has been exporting, it's its most valuable item, and that is the dollar. That's what the U.S. has been exporting, and that's what they want. They want most of all. But at some point, you have BRICS coming in. You know, they created this thing. I mean, with Brazil, with Russia, and with China, and they're just talking right now. They don't have a currency. They just meet and talk and have a good time or whatever. They're talking together, and the U.S. is not there. So the signs are there. I mean, you don't want to see them is one thing. Now, of course, you're going to say, well, you know, the U.S. has got armies and everything else. Yeah, but China is getting pretty strong as well. And there's a reason why, for example, China has been very active very recently. They've been doing a lot of war games. And not just games, war games. April, in the Strait of Thunder, China launched a major military exercise around Taiwan. The drill spanned the Taiwan Strait, South Seas, Bachi, Philippines, and they involve coordinated operation across the land, sea and air. Okay, so they did their thing. In early August, again, but this time, China and Russia launched a joint Sea 2020. There's a name to it. A joint naval exercise in the Sea of Japan. The drills included submarine rescue, anti-submarine warfare, air defense, missiles. They've been playing together games, war games together. They've been coordinated, talking. So, when I say this, I mean that. When I mean that, I say this, right? Late February, Chinese task group conducted live fire drilled in the Tasman Sea. The operation disrupted commercial flights. What are you doing? You're actually firing live rounds? And raised alarm across Australia and New Zealand. What are you guys doing? The signs are there. They say, well, just want to let you know, just in case you're thinking of doing anything. Because if I'm telling you this today, right, there's people over there that are thinking also what's happening. And they're saying, we're going to do this, we're going to close this, we're going to remove this, we're going to reduce that. They won't have it. They want to come and get it at some point. So we have to be prepared. If you can come and get it, then your lifestyle is going to drop, right? Because you can't get all these things. And if you want to get these things, you're going to have to pay for them. And since you can't make them, then you have to pay and you have to work and do whatever you do to pay what they want. What do you think is happening in England right now? England is not doing so great. I mean, it's a great nation. It's not a superpower, right? Like the U.S. is. But how long can you remain a superpower? And this is where I want you to, and this is what this channel is about, right? We're going to lose in Burma if you don't take a stand now. Yes. Free Washington, free baby oil. Okay, Daryl. If we don't check Trump, the U.S. could look in a big way. See, this is interesting because what Ali McAllister is saying is, basically what I think it's he or she saying that, well, you're not doing it the right way. Because John Public says, we are going to lose in a big way. He says, we're losing. We're on our way out. The thing is this the way to do it? Is this the right way to do it? That is the question. Are you going to find out? Well, you don't have a choice. You can't tell them not to do it. The thing for you, and this is what I want for my subscribers, I want you to kind of understand what's happening so you could monitor the situation and see how this impacts you. How is this going to impact you? Well, right now, the U.S. is on top. What do I mean by that? Well, the market is great. All these so-called deals Trump's proclaiming are all according to has not been put on paper. True. I mean, it's been some of it is been put on paper, but he wants commitment, and he wants commitment now, and he wants to make sure that there's something to be done because they're running out of time. So, okay, you know what? We'll give us 15%, and we'll come and invest and build a factory in your country in 3 or 5 years. Nah, that takes too long. I want something now. I can't do it right now and do something. Well, how about if I promise to give you and invest or whatever? So it's either you're looking at it as it's a full-hearted choice, or you're doing too quickly and you should take your time. Well, if I had time, I could take my time. This feels to me like the administration is running out of time and they need to move quickly. The thing is, are you moving too quickly because now you're upsetting the children? That is the question. Now, how we're going to find out? Well, we'll see what's happening. But having said all this, in the U.S. right now, as you could see, the latest inflation number that came out yesterday at 2.7%. We don't have an inflation problem, which is basically what the U.S. administration has been saying. You're scaring everyone with this idea that, oh, the tariffs, they're going to do this, they're going to do that. Nothing has happened so far. Yeah, but you wait and see. Okay, but right now we don't have it. And the market is going higher and higher. So be careful. For you, you may be missing out. FOMO, I'm sorry. Fear of missing out. You don't want to miss out. The stock market is going up, so you should be part of it. Why? Well, one, the economy is strong. Two, inflation is under control. It's not, it's only 2.7% year over year. It'd be nice to be 2%, but it's not out of control. Three, the market is up. Right? So what's wrong with all this? There's nothing wrong. Just be careful though. Four, the market is overvalued. The P ratio is around 25. That is high. But earnings are great. So keep buying. Be careful. Be careful, because if this goes sideways in any shape or form, but the market doesn't drop because, inflation is going to be high. The market is not going to drop because there's concern, about a recession. The market drops usually when there is uncertainty, surprise. The market hates surprises because it did not factor in that risk. And don't forget, in August, guess what? You're getting another rate cut. If you don't get a rate cut, then it's World War III between Trump and the Fed chair, because there's seven governors, right? At the Fed. Two of them are Trump appointees. So then, if they are Trump appointees, they're going to vote to lower rates. And therefore, what's going to happen is they're going to want to lower the rates. Now, what happened also, they lost a governor. She decided to retire early. In fact, she didn't vote the last time around. Why not? She didn't vote because she didn't want to get involved. So then what happened is she got out of the situation. So then you have 4 Trump appointees versus potentially 3. Still, 4 Biden appointees. So it's still a potential chance that they actually don't do anything because they keep waiting. Because basically the attitude is, I'm waiting for the inflation to come back, which is not fair because you don't see any. So, but chances are they're going to lower. Of course, you have to be careful, because if they don't lower, that's going to be a huge problem, because the market is expecting it now. And the Fed chair might be playing with that as well, although he's supposed to be impartial. But at this point, I don't think he likes Trump very much. And that's the situation that you're facing. So right now, short term, India and Trump argue back and forth, but I don't see unless India basically invests in the U.S. Maybe that's a way of doing it. A way to save face, to continue, to have promises and things like that. Okay. But if that doesn't happen, then you're in big trouble, because that's going to hit India. Then it's going to force India to turn around and shift and do some other thing. Now, in the middle of all this, I have to tell you that the Indian central bank is not changing the rates in India. Why is it significant? Well, because the central bank says its key interest rate kept its key interest as planned, increase on tariffs, and the decision to keep the rate at 5.5%. The central bank cut the rate by a higher than expected point in June to boost economic growth. So the point is that even in India, they have to manage the rate. So if you feel the market, the fact that they're not lowering the rates, it means they don't think that India is going to be slowing down. And this is the type of information I want my subscribers to understand. This is what is called the black swan, right? Why are we calling this thing the black swan? Well, the reason we're calling this the black swan is because we're looking for things that could go wrong. And obviously, lots of things could go wrong. We have this. That has happened recently. They were escalating quite a bit, like I just told you before, and that's always a situation that needs to be looked very carefully. But basically, what we're doing is we're looking for black swan, because everyone thought there were only white swans. There's no such thing as a black swan. But guess what? There is a black swan. You need to worry about the things that you don't see. You need to worry about the things that are going to impact you. What could impact us right now? Well, I mean, what's going to happen is if, for example, what's going on with Ukraine and Russia right now, um, could it go sideways? No, it's not going to go sideways, because they're not going to decide on the split of Ukraine up there in Alaska by themselves. That's not going to happen. The Nashav say everything is good. Everything is good right now in the U.S. But you do not make money, you do not take opportunities by reacting. Right? You need to be proactive. How do you proactive? That's why I come in. I'm come in by telling you this is what these people are really thinking and what I think is going to happen next, so that you prepare yourself. And we're not here to listen to the news, because unfortunately the news is biased, and that's a problem that I see all the time. They're looking at one way and they tell you some other things, and it's very difficult to know what's happening. So we are potentially at some point down the line, if this doesn't work out properly, at a potential war. Because the U.S. might need to go and get the stuff that it needs because it doesn't make it anymore, and you're not selling it to the U.S. or you're selling it too high. And the reason I could tell it, because look what everybody else is doing. Is Trump getting Moody's attention? Is Trump getting China's attention? Is Trump getting the attention of the Russian government? Right? Not getting any of that. So that's what he's doing. So the problem is going to be, well, if you can get attention, what do you think you can get? Because they're not talking to you really anymore. And of course, the way they're being approached is saying, you see, that's why I don't talk to him, because the U.S. is just too much, too fast. I mean, I don't, but maybe all along you've been kind of, slowly but surely decoupling yourself. Now, is this what's happening? It's tough to say. Very tough to say. But that could be happening. And that's the biggest fear that everyone else. You don't want to be left alone and there's no one that wants to dance with you anymore. Okay? So, at the end of the day, what's going on? Well, basically, when it comes to to India, you need to understand the following. One, India is charging 39% tariffs on agricultural goods to the U.S. Essentially, that means this is closed. We don't want your agricultural product. The reason this is happening is because Modi is basically saying, I want to keep the farm people, the farmers to vote for me. I want to keep my job. That's my interest. Okay, 17% on the other. So it's not like the India is open to the U.S. That's a fact. Now, 50% obviously is a lot more than all of this. Number two, what are going to be the tariff on India? Prior to 2025, listen to this. The U.S. maintained an average applied tariff of around 3.3%. 3.3% the U.S. was charging before. Now, of course, you're going to say, well, that's not fair. You're taking advantage of the U.S. Well, I mean, 3.3 versus 39, that's a lot. Tariff escalation. So then first in April, it was 10% baseline, reciprocal tariff. Now, remember, they knew at that time that India was charging 13% on everything else and 39% on agricultural, right? In August 1st, it became a 20% on Indian goods in response to trade imbalances. Because don't forget, this doesn't happen on its own, right? They were negotiating back and forth a lot. and the U.S. administration wanted to go after the agricultural product. Why can't we sell our wheat to you? No, you can't, because my farmers need to toil on their own, and I want them to blah, blah, blah. So it went on and on and on. I say, I'm not getting anywhere with you. I thought we were friends. Yeah, but not that good friends. So I don't think okay, fine. Then in August 6th, additional, bringing a total of 50%. Now you could understand now, and this is where I come in. You could understand why on August 6th, the US said, you know what? I'm going to charge an additional 25% because you're buying oil from the Russian. Is that really the reason? Maybe the reason is simply that I couldn't agree with you before, right? Because you're keeping those high tariffs on agriculture, and I want that tariff. I want that market for my farmers in Oklahoma or whatever, and you're not opening up. Let me look for a reason. You know what? But obviously, from the outside, it appears unreasonable. Would you want India to stop buying oil at discount, and they get 30% of their oil from Russia? That's not possible. We're not going to do that. Right? You see what's happening? That's what's really happening. That's what's really behind. I'm writing a book, so I want to put that on as well. That basically, that the U.S. is not really interested in the oil, Russia-India situation, because they know that 30% is too much. What they're really after is they want the agriculture market that has been closed to them at 39% tariffs. That's what they want, and that's what that. And you need to think that way, that like them, to be able to take advantage of it. How? Well, I mean, think rare minerals right now, for example. You should be buying rare mineral stocks. Rare mineral stocks. Now, they're not rare, by the way. It's not like we don't have any. It's there. It's just that Russia is the only one that took the time and the energy and the pollution to actually produce them, to get them out of the ground. That's exactly what happened here. So that's what they're doing. 3.3%, 10%, and now it's 50%. Of course, the way they're going to sell that to you is that the U.S. is being unreasonable. But is it really what is happening? Let us take a look at No. You're saying you sound French. I heard you guys to keep selling them just, well, like they say, I'm a foreigner, not from around here. Keep selling them jets. I'm in the U.S. actually, at least for now. I am not Indian. No, I'm trolling them. Here India have many toilet. Mother Nature is respect. Their Mother Nature is a toilet. Wow. Let me remove a few people here because I want just we keep this clean. I want my subscribers to be as informed as possible. This is not about gossiping. This is not about passing judgment on anyone, right? It's about understanding what's happening. And the more you learn, the better off you're going to be. And there's a lot to learn and a lot to understand right now. Okay, so basically, we went from 10% to 25 to 50, and then they'll basically it's an easy point to say, well, this U.S. is being unreasonable. Well, I don't know. If you think the U.S. is running out of time and you guys are not listening anymore, maybe it's not that unreasonable. We shall see. But the point is, you will notice right now that Trump is meeting with Putin finally, because it was tough to get a meeting, right? Trump is not able to move Modi or China. There's a pattern here, because you got these three guys on one side And then you've got Switzerland that came over and begged for less than 39% tariffs. They didn't get it. Then you have Taiwan that came over, that wanted to come over, and the U.S. said, "Don't show up, please. I'm talking to China right now. If you want to be helpful, instead of giving me 100, I want you to give me 400 billion." That's kind of what the play is right now. So that's a very, very difficult thing. Number three, the U.S. has a trade, not a service deficit, a trade deficit with India, which is about $45 billion, and it went up last year by 5.9%. So things are getting quote unquote worse if you look at it this way. In terms of service, the service actually has a small surplus in services. The trade has the U.S. has a service surplus by about almost 100 million dollars. Okay, so overall economic picture, I would say when considering all cross-border earnings, the U.S. might actually have a net surplus with India. Why? Well, because don't forget, it's 46 billion of trade deficit, but they also have, the export is 41.8, and the service import from India is 41.6. And of course, it depends how they will sell that to you by saying, well, the U.S. basically doesn't have a trade surplus, a trade deficit. Yeah, but I don't think that's the point. Forget the services. You have to worry about the trade. And then they'll tell you, well, why do the U.S. focus so much on trade? Right? Because you want to bring everything back. Why you want to bring everything back to the U.S.? Leave it the way it is. Are you sure? You're losing ground on this. Maybe you should make them in the U.S. But maybe it's too late because they're not really listening to the U.S. anymore. That's a concern. Number four, what will a 50% tariff on India do? Short answer, it's going to be a broad, lasting 50% tariff on the Indian good would be a real growth headwind. That's going to hurt a lot. With the bigger hits to export heavy sector, we're talking about textile, gems, jewelry, apparel. What it likely does to India over the next 12 months, you're talking about shaving off the 0.3 to 0.6 percentage points of its GDP growth. If maintained, right, India's central bank has 6.5% as a baseline. Economists warn growth could dip below 6% if U.S. shipments slump. Remember, they have 6.5% growth. The U.S. is 3%, but again, it's much larger. It's going to hit key export sector. This is going to hurt the U.S. by 18% of India's merchandise export, textile. Again, pharma is less targeted, pressuring profits and job in the export belt. Some of these firms are already considering relocating production and bypass duty overseas. They are trying to do something because they are dying. Market and currency effects, equity sentiment wobbles, the rupee direction depend on broader U.S. moves. But tariff uncertainty clouds capital flows. So now they don't know, should we invest in India? Should we not? What's going to happen? Is it safe for us to do it, right? So there's this tug of war that's happening. They don't know exactly what to do. Trade diversion. New Delhi is pivoting to 50 alternative markets. Right? It's pivoting. And that's going to be a problem. It's going to be a problem because going forward, the impact is sizable. The U.S. is India's number one export market. A 50% blanket tariff materially raises landed prices on a big slice of India's outward-facing economy. Wow. So how do we get there? Well, it took a while. It took some time. It took slow, but it's happening as we speak. Right? And going forward, the concern, peace, nice listening to your pod. Thanks, Al. Jester, what's up? Hey, Jester, how you doing? Yeah, well, watches are going to be more expensive going forward. Everything is going to be more expensive because, well, Switzerland is 39%, right? 39%. That's going to be a lot of damage right there. But we shall see. Number 5, basically, you should understand that India GDP, the service sector is 55%, the industrial sector is 25%. That's what we're talking about right now. That's going to hurt. And agriculture is 17 to 8%. So unfortunately, the time of the good time, let me show you what this to look like before they were, the relationship kind of went sideways. But basically, hold on, this is what it looks like right now. All right, this is it. That's the situation. Okay. Now, how long can it last? That's the question. At some point, Modi needs to either uncle down. I think the way it gets resolved, and mark my word on this, the administration, because the administration is not really doing this because of the oil, because they know that they can't do without the oil, right? The administration wants to get into the agriculture. Well, okay, if you can't get into the agriculture, then I need to then make some sort of an investment. Because so far that has been working very well for the administration. You got Apple that's been giving some money. You got Europe that's been giving $750 billion in energy, 550 from Japan, another $600 billion from Europe. 400. The U.S. is looking for $400 billion from Taiwan, and they better pay up, otherwise they're going down and they're getting taken over by China. That was kind of the threat, and the president of Taiwan came over and says, "Please, let's talk." He said, "I'm not talking to you. I'm not talking to you. I don't want to talk to you." And I want to share. This is what I want for my subscribers. I want to bring together my wealth of experience in business and education and all, investments. I want to, because I feel when I'm looking at the news, right, and I'm reading this, and I feel I could see that it is so biased one way or the other, and it's all brought back in terms of liking and friends and enemies. Like, for example, Europeans say that Trump agrees Ukraine must have a say over territory ahead of Putin talks. Because right now, they're meeting, by the way. What else is he going to say about Ukraine, right? Yeah, okay, fine, you have to have a say. But I'm not going there. I'm not going there for you. I'm going there for myself. I have interests. I'm going to Alaska so I could explain, and I want to test Putin to see how far he is going to go away from Russia. He agrees that Ukraine must have a say. But do you know what Ukraine wants? Okay. I will tell you what Ukraine wants. And you're going to see that, what are we talking? Right? These people are not idiots. Okay. What do they want? Ukraine basically wants full territorial restoration. Return all occupied territory, including Crimea from 2014. Legally binding security guarantees. If I could be part of NATO, I will take that as well. Justice and accountability, meaning international tribunals and other mechanisms to prosecute Russian leaders for war crimes and aggression. Sustain economic and military support. No negotiation without Ukraine at the table. Yes, these are all noble things to ask for, requests, but that's never going to happen, right? Russia is not just going to pack up and go home, right? That's not going to happen. They're not going to pack up and go home. So if you're not going to get that, then what is the point? Well, the point is you need some other way of looking at this. You need to be able to understand what is happening. And right now, what's going to happen is you're losing ground. Russia should go home. Arian, yes, of course Russia should go home. Everybody should stay home and not fight. Everybody should be trading with each other and not have tariffs. Peace to children. Yes, respect. I totally agree with that. Unfortunately, we live in a world that, and you got to wonder, why are we having wars all the time, right? What's causing the fact that we have wars? That's because the human mind, the human brain, is basically always trying to save energy by not overthinking too much. So we are reacting, right? Here we're trying to do the other way. We're trying to say, okay, can we take this to our advantage? Because right now, if you want to take advantage in the stock market, looks like a good time to do it, because everything is cheap. And take a look at my Patreon channel, by the way. All of my recommendations are up. It's amazing. It's not amazing because, I basically looked at some rare earth mineral stocks, gold stocks, cheap stocks, low PE, strong growth, no debt. I mean, things that you should be doing anyway. Hey, Philip. But the point is, yes, Russia should go home. But where are they there in the first place? And who is leading them there? And do you actually think that this guy is going to say, okay, I'm sorry, let me pull back, let's forget everything? No. And it's always a problem, right? We have to, we got to make sure that, I mean, everybody should go home technically, right? Everybody should be on their own. The only thing is, there's a reason why Russia is there to begin with. Otherwise, it wouldn't make any sense. There's a reason why Trump is trying to talk to him. But is that what's happening? Okay, let me see what the result of the. Let me do another survey here because I think people want to have something to say. Let's take a look at did I ask that question? Is the U.S. No, the U.S. is not really on the reason. I mean, a little bit, but not too much. How about that one? How about, is the U.S. on its way to become irrelevant? This is going to be a lot of damage on this question right there. How about that? Is the U.S. on its way to become irrelevant? Let's see. Peace to all, everybody, freedom. Yes. The first one said, does India need the U.S.? 60% said no. Second poll I had, is U.S. being unreasonable? 50% only said yes. And now, the biggest of all, is U.S. on its way to become irrelevant? 69% says yes. So I might be onto something here. So if that's the case, if the U.S. is becoming irrelevant, you could understand why they are pressuring, they are pushing, they are tugging, they're doing everything that they can to remain relevant. And the only reason you remain relevant, right, is when you represent a buying power. Because once you stop being, and don't forget, the U.S. consumer is the largest, most important element having to do with anything, because it is a tremendous amount of power that the U.S. has. The U.S. consumer, and that's what the U.S. organization, the U.S. administration is using right now. Now, what this channel does, it basically follows several items. First, we looked at the economy. I want to explain to you, I mean, at the end of the day, there's a bit of a educational aspect to this channel. I mean, my subscribers tend to be a little bit more educated, a little bit older, than usual, and probably have more withhold and understand and knowledge. And I want to keep it that way. So we're following the economy, which is doing fine in the U.S., and we'll talk about other economies at some point. We're following the stock market. Having said that, if you look at the stock market globally, I will tell you that year to year, year to date, the U.S. market is doing great, but it's not. It is not the most performing market right now. I will tell you. Year to date, the stock market is up 9%, 10% in the U.S. Germany is up 20%. Great Britain is up 12%. Italy is up 23%. Spain is up 30%. I need to find that out. But basically, it's really Europe is doing fantastic, my friends. Europe's stock market is. Sir, one person that is Mr. President Ajay Kumar is destroying the India-USA relationship. Well, yeah, but as we said, the reason this is happening is because essentially the administration, the U.S. administration, and I want you to understand that, Ajay Kumar. And I mean, you could argue the point that, well, you're doing it the wrong way, but basically they have been, first of all, India is charging on products coming from the U.S. to India, and 39% for agricultural products. And at that time, the U.S. was charging 3%. What is it not to like? Okay, sure, you like him, but you're being charged 3% where you're charging 13 and 39%. But now, obviously, it went from 3% to 10% to 25%, and that's where we stand right now. So the survey is about, and the poll, 67% feel the U.S. is irrelevant. That is something to think about, my friends. Okay? So we have lots of interesting topics going forward over the next couple of days, and check the channel, subscribe, and you'll see you will learn a lot. And this is all about learning. This is all about understanding. This is all about seeing what it's about.